It's April, and we have another real estate market update for you for the Austin area. I'm David Shapiro with my colleague Lee Abraham. We are real estate agents, brokers. Lee has a background as an appraiser. We wanted to dive in, like we do every month, and show you what's going on in the market. Remember, if you want to find us, you can always go to this URL and find our YouTube channel for all of our updates. If you subscribe, we're mostly just posting to here. We're not doing that many email updates or anything at this point. So this is the number one spot to get updates from us. All right, let's look at the number of active listings. And wow, what a jump here in April from 2,200 up to 2,800 active listings. You can see if you look back at previous years, the jump from March to April, not as significant as this one. So that's interesting to see.
Yeah, you've got to go back a few years, David, to see that kind of a supply side move.
Yeah, like here you can see it, but that
Right.
was, that was when interest rates were being raised. So that was a very unique time in this cycle. So yeah, a lot of supply coming online. Not surprising overall is like a macro trend because there's seasonality and people tend to list this time of year, but this big a jump, I'm a little bit surprised by this early in the selling season. You can see that kind of jump maybe would happen from May to June or June to July. So pulled forward a little bit here.
Yeah, it's interesting. And so that number was reflecting just over 2,800 active listings. And as we do, we break that into a monthly housing inventory based on some different metrics on how to track how many sales are happening per month. The good news, in tandem with the increase in supply, the 30-day pending number, over 800 sales, 814 pending sales in the last 30 days. That's a big jump. And then when you look at the closed sales, which is always lower due to escrows falling out and so forth, 670 closed sales over the past 30 days. Those two numbers are indicating a monthly housing inventory of anywhere between 3.5 and 4.2 months inventory. So kind of hovering where we're at. And as usual, fortunately, in our case, as supply goes up, demand is chasing it. So these numbers are moving up a little bit, but still very much in the stable zone.
Yeah, so let's look at that over time. So you can see this did not jump to the same level as the number of active listings, but I anticipate with seasonality like previous years, this will creep up here. We've been pretty stable in the five, as we get into, let's see, this 5 months is around October, again here in November, October, no, actually that's a little bit earlier. That's August. So I wouldn't be surprised if we hit 5 months again. So that's kind of what to expect here. Here we've got the number of sales per month down 14% year over year. So continue to see very slow in terms of the number of transactions that are actually happening. And if you were to look back to 2019, I think is kind of our baseline we generally look at. But we're still down. I've generally been saying we're down about 30% of where we should be on the number of transactions. And very interesting to see it down 14% year over year for the month of March.
Spoiler alert, David. Take a look at the next slide.
Okay, what am I looking at?
Well, you had requested a further look back.
Oh, got it. So you're saying now we can look at 2019 and earlier.
Yeah, this is going back to 2011, just to give us some more context in terms of the ups and downs of the market. We're doing that in this report, David, for all of our stats.
Okay, cool. Yeah, I think that's a good thing to look at. So you can see here's 2020, right? When things started getting different. And so we had a huge spike in the number of sales over what we saw for previous years. 2021 here. Interesting that was not even as much as 2022. So, and then of course things came down much lower than the previous lows. So here is kind of roughly where the lows were in 2019, right around 600 and well below that around 400. And then seasonality, they should be coming up. It's a little bit hard to tell what month is what, but I think it's easy to see the lows and the highs.
Right. So the average sale price didn't set the high mark for March going back, but it is the third month over month, year over year increase that we've seen coming in at well over $800,000, David.
Mm-hmm. Yeah, so this is a break in a trend which we saw, which is that January and February were all-time highs for average sales price. So that was a really interesting thing to see when we had basically all-time lows in the number of transactions that were happening. So here we have, let's see, was this an all-time low in the number of transactions for the month of March? It's hard to tell, but certainly in the last 5 years and probably going back for a number of years before that. So we're still really low on the number of transactions, but and still high on the average sale price, the second highest March on record, going
Right.
back to the all-time high in 2022. Interesting, if you go back just prior to that to 2021, people still have equity, right, on average. So the only people that wouldn't have equity would be somebody that bought within those several months where things really peaked. And I'm curious how far off we are. So 864 was that peak in that March minus 823. So it's 41,000. So about 4.7%. We can round that up to about 5% below the March all-time high from 2022. But interestingly, anecdotally, we have a property to look at that looks a lot different than this. And this is where real estate's really hyper local, and we can maybe even show some of the heat maps. But this is a property that came to my attention that I find very interesting when we're talking about average sale prices. So let me show you these two properties, and this one specifically that's currently listed for $392, just to show you these are in South Austin. And these came to my attention. They're the same floor plan, basically. They're both 1,590 square feet, three threes. And what I find really interesting, there's two things I want to talk about here. One is you can look at what this person bought this for at basically the peak of the market in March of 2022, $548,000. The person that sold it to them bought it in 2017 for $250,000. So they did quite well. They walked away with a nice chunk of equity. But now here we go 3 years later. And what was that? That was 5 years. So this person owned it 5 years. This person's owned it 3 years, and they have it listed for $392,000. So looking at losing probably $170,000 on this transaction, which is really unfortunate. And so that's, do the math. If they sell it at this price, it's roughly 29% discount over what they paid for it, which was at the peak at the all-time high. So, you have these one-offs where you can identify individual properties that are down 29%. Whereas if you were to just look at the overall stats, you can see that we're only down 5% on average. So real estate is really hyper-local. And then the other thing I wanted to talk about with this property was just kind of a lesson to sellers. They made a really bold decision on this house. And, I got some feedback from talking to some people involved here that said that this was really a lot of feedback from buyers was on this cabinet choice. And I think, the lesson is get your real estate team involved really early, your agent, to help you and look at some of these decisions, because one thing you want to do when you're listing a home for sale is attracting the broadest group of buyers that you can. And there's probably a buyer that freaking loves this, but most buyers, they would rather just see white cabinets. And you can go look at the comp that's under contract for $400,000. It's pretty standard white cabinets. And there's some other things in here. If somebody's doing this renovation, like a different mirror here is something that can really add a lot. I'll show you the other listing where they did that, and just some other choices. So recommendation is get your real estate team involved. And also, people think like, well, they got to just look at those cabinets and be like, it's a couple grand to paint them. Why would you buy the other property for $400,000? This one right here, when you can go get that one for probably under $390,000. And here you can see this has the white cabinets. I think the other thing they did well here is this bathroom. And that's not that expensive to do a little bit of backsplash and a nicer mirror. But really, I think those little things made a difference on this property, apparently, because this one's under contract and it was listed at $400,000 and the other one's listed lower. So don't overestimate buyers and their ability to visualize and understand, oh, it's just a little bit to change that. Either they don't want to be hassled with it, or they just don't know that it's so easy to change certain things. So lesson to be learned there. Very interesting one off. I think we probably it'd be cool if we could, look for more of these paired sales analysis where you can see what did it sell for in early 2022 and what is it listed for or selling for now.
I'm still trying to get over those cabinets, David. I mean, there's always a combination of variables that go into the marketability of a home. Part of that is the direct competition when you have a model match of the same floor plan that's available. Oftentimes, people, as you know, value the time, the hassle factor, and so forth. And turnkey typically wins out for the owner occupant as compared to the flipper. So makes sense, but I do agree completely that anyone thinking of selling their home or making improvements to a home now with the plan to sell it in the foreseeable future would be wise to bring in an experienced agent who can help guide some of those choices to help them enjoy the home while they're in it, but also maximize the marketability and gain on the resale.
Yeah. Yeah. I think we want to be involved as early as possible because there's lots of little things that, we've been doing this a long time. That's just one example. I bet most people watching this are like, oh, of course, I would never paint my cabinets that color. Yeah, I get that. Most people probably would know that, but there maybe is something else that isn't as obvious to you, but would be obvious to us. So we like to get involved super early and help our clients avoid mistakes like that seem really small, but can cost them $10,000 maybe or more. So, all right, diving back into the statistics. So here we got the average sale price over time, and you can see the seasonality, right? Every year it's just a little bit up and down. And then the huge jump in 2020 and 2021. And we've maintained pretty well up there, right?
Well, the interesting thing here is that we need more time to really establish what the net trend is going to be going forward, just based on regression analysis, which is what this basically is. And so, yeah, you can just see the spikes, but what a nice time frame it was from 2011, let's say, to 2020, when you could pretty much count on anywhere from 4, 5, maybe 6% annual appreciation year over year and kind of bank on it. Now things are a little bit more dynamic, and that's just the state of the world these days.
Yeah, I mean, good point. Like we're talking here just the day after Trump announced tariffs. The market's not liking that. The market people don't like uncertainty. This was very certain, right? Like, there were people still in here that were coming to me in 2015 saying, well, should I sell? Like, look at all this appreciation I got. It's gonna have to go down. And I'd be like, I don't know, like I don't see that, but and I would encourage people to keep buying. Oftentimes, people would come to me, a year or 2 years later, and be like, all right, it's still going up. Like, I guess I'm just gonna buy. And that was even a good decision to then buy in 2017, 2 years later, and because they got all of this upside. And even that property I just showed, like they bought it in 2017 for 250. They'd still be up if that was still the same owner selling it today. They're still up at 392, have a pretty nice gain. So it's just time. Selling a home after 3 years, we're usually not advising that. Usually we advise like, buy something that you can hold for 5 years. 3, most of the time you do okay. This would be the exception. You bought here and you're selling it here, right? All right, moving on to the days to sell. So we see a year over year increase, month to month, big drop down, seasonality. That's good to see.
Yeah, and we're looking for that to continue. So I see this backing off a little bit from our standpoint. The work we've been doing with our buyers, in particular sellers as well, velocity is definitely picking up. And for listings that are attractive and priced right, they're moving fairly quickly, David. So I'm looking for this number to continue to dip.
Yeah, it's such an interesting market, because it looks like inventory is growing so much, but then we can look at clients that we have, buyers that are out there looking, and they can't find the right home, even though it seems like inventory is growing. Days on market were higher, it's coming down. So there are neighborhoods that it's hard to find the right property at the right price. And then there's other places where seems like there's an abundance of options. So it is really neighborhood specific. Here's days to sell over time. So, I mean, here was normal, right? This is normal. This is abnormal. And here, this is a little bit closer to normal. We're closer to normal now than we were here when things were selling over the weekend. We do have we are in the midst of an interesting. We have a lease listing for a client of ours who bought a home, and so we're helping him lease his previous home. And we've got a little remnants of 2021 with multiple lease applications. So there are some hot parts of the lease market. Maybe that's because people are, leaning towards leasing over buying at the moment. We'll get into mortgage rates, which with everything going on in the stock market, those have come down a little bit. So we'll talk about that. But a lot going on in the world for sure.
All right, sale price, list price ratio. One of our favorites, it's an acquired taste, but I think we're there. 97%, a little bit up month over month, a little bit down year to year. But David, go to the next slide. Let's just cut to the chase. Look at this thing.
Wow. Wow. That is quite the jump.
Right. I think that's the most dramatic real estate statistics graph I've seen in a very long time. And when
Yeah.
you visualize the data this way, it really does show the aberration of that historically strong seller's market.
Right. Wow. All right. We've got new listings up 20% year over year and month to month up 50%. I'm curious to see what this one looks like. Okay.
The most benign of all
Yeah.
graphs, showing the illusion of stability. It's interesting when you parse it out. But yeah, also somewhat shocking.
Yeah. What a shocking comparison to the last, 14-year chart we looked at. This one seems pretty normal. So, okay. So nothing out of the normal with the number of new listings coming online. Let's look at our inventory barometer. What do we have here, Lee?
Well, basically what we're showing there is a weekly report on how many new listings hit the market that week and how many pending sales for the week. If you go down to the most recent week, March 23rd through the 29th, you'll see there were 403 new listings, which is a big uptick from
Yeah.
previous weeks. Pending sales 181. That gives you a 223% supply demand coverage ratio, which means that there were, on the surface, 222 more listings at the end of the week than at the beginning of the week. But again, we go to the next slide where we're showing the impact of expireds and withdrawn listings. That 222 new listings at the end of the week really had to be reduced by 46 expired and withdrawn listings. So still a significant increase of 176 new listings at the end of the week. You'll see the weeks that have the yellow highlight and how there was a big cluster there of a declining actual number, a retraction in the number of listings. Well, that trend is kind of dissipated as we expected with seasonality. And so as we get into the strong portion of the second and third quarters with the selling season, we're going to see the expireds and withdrawn be less and less of an impact variable. And I see this coming back around in the fourth quarter. But we'll continue to report on it as long as it's giving a significant impact. Bottom line, David, is the inventory, however you look at it, is beginning to grow.
Mm-hmm. Okay. Mortgage rates. So down, let's see, do they have the daily? No, it's just the 1 week. It's only down 0.02. Now, the big news was yesterday, Trump announces these reciprocal tariffs. And, some of the numbers, and I was talking to one of the mortgage lenders we work with, and what was the mortgage rates today? Was that the website? Let me see if I can find it real quick. But he was talking about what he's seeing in mortgage rates. And all right, it's Mortgage News Daily was the one that he recommended to use to just kind of check the rates and see what's going on. So big move is 0.12 is the 30-year fixed. Like his thought was, you go back to 2019 and prior, this is a really big move in mortgage rates. Since 2020, these types of changes have become more frequent, but this is still a big move to see rates drop 1/8 of a point from one day to the next. And he's tracking all sorts of different things. Our recommendation is like reach out. We'll connect you with a really awesome lender that's local, that knows what they're talking about, provides great service, and they'd be happy to talk to you more in depth if you're interested in learning more about this. But they're tracking different numbers, one of which is the mortgage-backed securities. That number was down like a quarter point, and not all of that gets passed. Oh, here you go. You can see it's 0.31 now. When I talked to him, it was about a quarter point. And that does not fully get passed on to the consumer. Now, it could over the next couple of days. And if we see a couple of days of what we're seeing now in the markets, and for some finance 101, what's happening is there's a flight to safety. Investors are shook. They don't want to deal with the uncertainty. So what do they do with their money? They move it to bonds. And as more people buy bonds, the demand increases, the yield on bonds goes down, right? So it's actually that the price goes up on the bonds, right? So then the yield goes down. And so that's what we're seeing. And so if there's continued uncertainty over the next couple of days, that's when we would see these rates come down even more. And so this is applicable to people that are looking to buy. It's applicable to people that already own and bought in the last couple of years, and they think, okay, at some point I want to refi. I'd say we're probably at a point it's worth just touching base with your mortgage lender and just give them a number. And this is what the lender I talked to today likes to hear is, hey, let's come up with a strike price. This is the rate. When it hits this, I'll let you know. And then we could talk about a refi. So wouldn't be a bad idea to just hit them up with a quick email and just say, hey, I'm thinking this rate. If and they can help you calculate and figure out what makes the most sense for you, to do a refi that, you can break even on pretty quickly. So that way, if rates drop again, you can still take advantage of that. And there's not a huge out-of-pocket cost. So there is a theory that the Trump administration is trying to crash rates because there's 9 trillion or 7 trillion. There's a huge amount of federal debt that needs to be refied this year. And so if they can crash the rates on the 10-year treasury, then they can refi at a much lower cost to the country. And so maybe that theory's right. It works out well for people that are trying to buy or refi because mortgage rates are going to drop with that. If you own real estate, probably not impacted a ton by tariffs, right? Like, now building, we'll see how that's impacted. So, and supply down the road. In fact, right, if supply is hurt because it's more expensive to build, it could actually benefit those that already own. There's a lot of factors at play here, and who knows what's going to happen in the next couple of days, let alone months with the tariffs. So just things to keep an eye on. Could be a good opportunity for you to get out there and lock in a mortgage rate on your purchase or on a refi in the coming weeks. So something to keep an eye on. Any thoughts, Lee?
I just think that now is a good time to be a buyer. Inventory is going up. Rates are trending down. We don't know how long that will continue, but we do know that right now that's the trend. And
Right.
so, the weather's nice. And let's get out there and take a look at some property. That's my.
Yeah, and the other word that keeps coming up is recession. And one thing to keep in mind is that generally in a recession, the Fed is going to try to stimulate the economy by lowering rates. And so, what we've seen in real estate is the economy was overheated in 2022. So what did the Fed do? They raised rates. That hurt the real estate market. So real estate has been in a recession, you could say, for the last couple of years. Lots of mortgage people had to leave the industry. Most of the mortgage teams I knew had to reduce their team by 90% at least. Some of them were 20 people and, went down to just them. And so, that the real estate's been in a recession. So what's going to happen if the rest of the economy goes into a recession is they're going to try to stimulate it. And really the only tool the Fed has is interest rates, which directly benefits real estate, which is a huge market, right? So if you can spur the real estate market, people start buying more homes. Now they got to go to Home Depot and buy more stuff for their home. They got to buy more furniture for their home. They have to hire contractors. And there's all these things that start happening. There's more inspectors and real estate agents that are getting paid. And so that just filters down through the rest of the economy. So the fact that, like, if you're worried that the market, this is it's the world is ending, Trump is tanking everything, like, that may not turn into tanking the real estate market. It actually might buoy the real estate market, and things might actually go up from here. So just keep that in mind as you're, thinking about what your next move might be in the real estate. So, and if you have questions, you want to talk about this, about your property, go ahead and comment on it. Just throw out an example. We're happy to in the comments, chat about this, or reach out to us and we'll talk to you about it. That does it for today's video. Thank you for joining us. If you got a lot out of this, please send it to a friend, or give it a like. If there's something you liked in the video that you want to see more of, like you want us to do more of those example properties, you want us to find more paired sales analysis like that one I showed, go ahead and say that in the comments so we know what you're looking forward to. And don't hesitate to reach out if you have questions on real estate. Again, it is hyper local. Thanks for joining us. Look forward to talking to you next month.
Thanks, everybody.